I'm Alan Kenny, Editorial Director with REIT.com, and I'm at REITWorld 2014 in Atlanta at the Marriott Marquis Hotel. Joining me is Jon Bortz, Chairman, President, and CEO of Pebblebrook Hotel Trust. So, Jon, give us an idea, how do things stand with your balance sheet right now? And I know that you've recently done some things with your credit facility.
About 4.5 years ago, we went public. We started at zero. We had no assets. And since then, we've acquired 31 hotels. We've invested about $2.3 billion, and we have an enterprise value of about $4 billion today. On the balance sheet, we have about $800 million of debt, of which $100 million is a term loan, and the rest are mortgages. So our balance sheet today is what we would describe as beautiful. It's about 20%. Our debt is about 20% of our total enterprise value. We did just redo our credit facility. We extended the facility, we increased the size of the facility, we lowered the cost of the facility, and we improved the terms of the facility. So as we've gotten larger, we have a need for more ongoing liquidity. We increased the size of the facility, and obviously as our credit has improved, we've become a real company in the last 4.5 years. Our terms have gotten a lot better along with the improving environment for debt.
And Pebblebrook operates in what are considered, gateway cities. Tell us about the operating fundamentals there, and then also, are there any other markets that you're looking to get into right now?
The lodging business and our markets in particular, which are the major gateway cities as you described, it's mostly East Coast and West Coast, from Boston to Miami and from Seattle to San Diego. We would describe it as being in a bit of a Goldilocks scenario right now. Business is awfully good. Demand is very strong. We have quite a number of demand factors coming together right now. We have a continuing improving economy. So we have very strong transient, both corporate and leisure. We have an aging economic recovery here, which is broadened out and including lower income and middle income people. And as that does, that's added demand. We have group that's finally recovered as there's more competition for people, as employment has risen over the last 5 years. We have very strong international inbound travel as we finally allow people to come into the United States following the last decade where we made it very difficult for them. And all of that is coming together at the same time. So demand has actually accelerated significantly into the 4.5% range this year. And supply continues to be limited, and it's still running under 1% growth on an annual basis. So we have a large gap of demand outpacing supply. We have occupancies that continue to rise, and in pretty much every gateway city that we have, we're at record occupancy levels. Our portfolio, as an example, will run about 85% this year versus an industry that's going to run about 64%. So the gateway cities are very strong. And they look to get stronger on an ongoing basis.
And then looking ahead 2015, in the lodging sector, do you see any potential game changers out there, either positive or negative?
I think where we stand today, as we look at next year, is probably with a much more positive outlook than we had maybe 6 or 12 months ago. The big positive is if demand continues to run at these very high levels, or even more modest growth levels, we'll continue to significantly outpace very, very low supply growth as it continues to be difficult to get construction financing. And that'll allow occupancies to continue to rise, and that'll allow us to have ongoing pricing power in the marketplace. And so we've gotten to the point this year, as an example, where the quarter we just released, our RevPAR grew 11.4%. We're up 9.8% year to date through the first 3 quarters of the year, and the industry's pacing just under 9%. So RevPAR growth is very, very strong, and that's allowing for very positive growth in bottom line profitability.
All right, thank you so much for your time, Jon.
Thank you, Alan.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.